Welcome back to the channel, guys. We are talking about a penny stock today that has the potential to 100x in the next 10 to 20 years. This penny stock trades under $100 million valuation and has a very small float, meaning that the company has a potential to move big. So if you guys would like to stay up to date with all the penny stocks I am looking at, go ahead and hit the like button and subscribe for me so you guys do not miss out as soon as I post a video.
Now, the key to making money in a situation like this is to position yourself now before the settlement. Because by the time you read about it in the Wall Street Journal, it's already too late.
At this company's current share price of $2.43 with a $65 million market cap, this is a company you guys do not want to miss out on if this is your kind of investment. Now, I'm going to be quite honest here. I do not have a position in this company, but I will be making a position in this company in the next week, and I will be making a follow-up video about that. This company just poses such a big opportunity going forward. I cannot pass up on this opportunity. Now, this company is in the biggest field, unfortunately, that causes the most deaths in the world, which is cardiovascular events. Now, guys, the stock I'm talking about is Caladrius Biosciences, ticker symbol CLBS. CLBS was down quite significantly Friday, almost 15% down for the day, recovering almost 5% in after hours. And we can see, pulling up the 3-month chart, the stock looks very bullish. It's up 60% for the past 3 months and overall has a nice bullish trend going forward. Before we go any further looking at CLBS, I want to play a clip from the last earnings report about 2 days ago from the CEO of this company, telling you guys more about what they do and how they do it. He is much better at explaining it, so I'm going to play that clip now.
So CD34 cells, unlike many cell therapies, actually have a very well-characterized mechanism of action. The MOA has been documented preclinically and clinically and reported in a variety of peer-reviewed journals over the last decade or more. CD34 cells are naturally occurring endothelial progenitor cells that reestablish blood flow to underperfused tissues. They are pre-programmed by nature to be pro-angiogenic and anti-inflammatory. So think of them as providing a biological bypass at the microvasculature level. They essentially provoke the growth of new capillaries, which then reperfuses tissues that are underoxygenated and undernourished. Providing the therapy is actually simple, well-defined, GMP, economical, and scaled. So unlike many other autologous therapies, which take long times, weeks, sometimes months, and can cost hundreds of thousands of dollars, ours are very straightforward. We are 4 days from vein to vein, as we say in the business. The process starts with a GCSF-induced mobilization of the patient's CD34 cells, which induces the cells to migrate from their natural habitat in the bone marrow into the peripheral blood, where they can be collected through an apheresis process. At the time of the apheresis, then a sample of those monocytes are sent to a central processing facility where they are then, the CD34 CR4 cells are isolated, concentrated, and then formulated in a proprietary media that is then specific to the indication and the site of administration. And the site of administration, or the mechanism of administration, is of course indication dependent. They get sent back to the same patient where they are administered. There is no need for surgical bone marrow aspiration, so it's a much less intrusive process. We do no genetic manipulation or ex vivo expansion of the cells, so there's much less that can go wrong during the handling of the cells. And as I mentioned, the cost of goods is quite reasonable, and the time from donation to treatment is also relatively short.
As you guys can see, the reason for the sell-off on Friday was that they announced a $65 million direct offering at market price. So that is definitely a good long-term prospect that we should be missing out on the next future capital raise, at least for the short term. You guys can see they have 5 different drug candidates, all trying to treat different cardiovascular diseases. Now, the odds of all 5 of these failing are very low in my opinion. And as we go down the list, we can see that they have quite a few in later stage trials. As we can also see, the most advanced trial right now for critical limb ischemia and Berger's disease is ongoing in Japan right now, and they expect top line data in Q2 of 2022 and a Japan National Drug Administration submission in the second half of 2022 and a subsequent approval in the first half of 2023. I'm going to put a link in the description to where you guys can find this at, but I do want to point out for the chronic kidney disease scheduled to take place in the USA, the clinicals that is, they expect top line data in Q3 of 2022. So it seems like the US trials are going to go faster, so that is also a positive with the stock. CD34 Plus cell technology. Heart attack, chronic heart failure, critical limb ischemia, and stroke are all caused by an acute or chronic deficit in the supply of oxygenated blood. One of the body's natural responses to areas with low levels of oxygenated blood is the recruitment of CD34 plus cells to those tissues. Caldria's CD34 technology leverages the body's natural repair mechanism to induce the development of new blood vessels, preventing tissue death by improving blood flow. So if you guys are unaware of just how big this total addressable market is, 32.3% of all deaths are from cardiovascular diseases. That is over double of all cancers put together. So as you guys can see, this could quite possibly be one of the biggest total addressable markets there is. A couple things I want to go over that were on the investment highlights last earnings report about 2 days ago. Multiple potential value creating events in the next 12 to 24 months based on milestones across the pipeline. Strong balance sheet, $40.3 million in cash and cash equivalents, September 30th, 2020, with no debt and cash runway projected to fund operations through 2021. Seasoned management with noteworthy domain expertise along with big pharma and emerging biotech experience. And guys, this is what really sells it for me. Is most companies, especially biopharma companies, are notoriously bad with cash burn and balancing a budget. And this company clearly has no problems doing that. $40.3 million in cash and no debt. That is one of a kind in this field, or very close to one of a kind in this field. So if there is any pharmaceutical company that would be worth taking a gamble on, because keep in mind, these companies are speculative, they are gambling, it's basically gambling. You're trying to find the next big company, and I would rather put my money with a company with no debt, with cash to sustain the next year. So personally, I am investing in this company at a current $65 million market cap. It would be dumb of me not to invest in this company, especially since they just had a 15% down day Friday. So come Monday, I will be buying shares in this company. I will probably scale in my position, which is just dollar cost average over the course of a month or so. But keep this in mind, like always, this is not a recommendation. I am documenting what I am doing so I can look back at this at the future and hopefully help some of you guys as well make good portfolio decisions and overall increase your skills when it comes to trading and investing in the stock market. So if you guys do get anything useful out of this video, go ahead and give me a like and subscribe. I greatly appreciate it. Hope you guys have a great weekend. I will see you later. Peace out.